markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The selling is intensifying. Now a 608-point drop for the Dow Jones Industrial Average. The S&P session lows down 69, down 1.6%. NASDAQ down 256, a drop there of 1.9%. Equities lower as investors weigh the potential damage from sanctions to Russia after Russian President Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. 10 years up 3/32, 10-year yield 1.91%. Spot gold is down $2.73 the ounce right now, down 0.1%, 1903. West Texas Intermediate crude up 1.5%, 92.39 for a barrel of WTI. Bitcoin up right now by 1.6%, 37,676. Bottom line, though, stocks are declining on the Ukrainian shock. Oil is moving higher. As for the market backdrop, Kristen Bitterly is head of capital markets at Citi Private Bank. She was interviewed this morning on Bloomberg Surveillance.
We don't think that they're going to start off with the 50 basis point rate hike. I mean, I think some of the Fed rhetoric last week actually showed that. I mean, it doesn't mean that they won't do 50 later on, but to start off with that might be a little bit too extreme. And look, I mean, they're still buying bonds. You know, they're still increasing their balance sheet. And I think they're going to wait to see exactly how the base case effects turn in terms of inflation in the second half before they do such an aggressive move.
And indeed, that is Leslie Falconio, head of U.S. fixed income asset allocation at UBS Financial Services. Leslie Falconio of UBS talking about the next move for the Federal Reserve. 10-year yield again 1.91%. S&P down 71, a drop right now of 1.6%. After earnings, Macy's shares down now by 5.3%. Home Depot shares after earnings plunging now by 9.7%. Recapping S&P down 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Take's Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We are streaming on YouTube. It is a very busy Tuesday, February 22nd, 2022. You heard Charlie Pellet breaking it down. We've got stocks near our lows. I'm Carol Masser. My co-host Tim Stenovic is off for a few days. Joining me is Bloomberg cross-asset reporter and Quick Take anchor Katie Greifeld. And again, a risk-off trade.
Yes, definitely. I mean, just in the last hour or so, it seems like the risk appetite that maybe we saw a little bit of this morning has definitely soured.
Right, and we know why, right? There's a clear reason why. We're going to get into those geopolitical concerns, Russia's intentions on Ukraine. We are expected to hear from President Biden in any moment, and we will take you there live. In the meantime, we will have analysis on those comments from President Biden. We're also going to talk about the energy markets, the reaction to it all, Katie.
Yeah, it seems like that is the first line of impact for a lot of these tensions that we're seeing in Russia and Ukraine right into the energy markets.
All right, we'll get to that. Plus, after long COVID, U.S. businesses getting ready for long inflation. We'll get into that. We'll get into also a breakdown of today's headlines from the U.S. Supreme Court. And Elon Musk, never boring.
He's in the sky. He's on the ground. He's under the ground, too. What a man.
All right, we'll talk about his intentions, speaking of intentions, in Texas, and also making a better bagel. We've got it all covered on this Tuesday. Let's get to the Market Drivers Report. Let's set your Bloomberg Business Week agenda. Kriti Gupta in the house in our Interactive Brokers studio. She's Bloomberg Markets correspondent. Vince Signorella, global macro strategist at Bloomberg News, on the phone in White Plains. Kriti, kick it off for us. We do know risk-off trade here, and we know the reasons why.
Yeah, risk-off trade. And I think we are now, I want to say we're down further than our previous peak that we had essentially thought that the market kind of bottomed out at before we started to see these Russia tensions. Yeah, we were just barely there. The peak there for the S&P, or the bottom, I should say, there for the S&P 500 was 43.26. We're now at 42.77 on the S&P 500. So we are dropping once again. What's important?
So meaning a new low?
New
No.
low for the year, actually,
Okay.
now that you bring that up. Yeah, good point. I'm trying just to look at from the peak. And folks, what's important to note about this morning's trade here is that from the peak, you're actually down about 11.3%. So one of the
On the S&P?
On the S&P 500 from the peak of January 4th. So that's going to be a really key piece of the equation because, yes, everyone kind of thought that perhaps the market had bottomed out earlier because of the kind of Fed hawkish pivot. Now, I think some of the fears is that do we start to get closer and closer to potentially a bear market? That's going to be your more extreme fear. On the other side of it, it's do some of these tensions kind of ease up and rescue the markets, because that's what this is. This is straight up pull your cash out of the markets. And you're seeing this really across risk assets. We were just talking to Matt Miller on Bloomberg Television about why you're not seeing potentially stronger moves into the treasury market, stronger moves into havens, for example. And I think it's because people are just literally moving to cash right now.
All right, good to know.
And Vince, that's what I want to get your perspective on, because I'm looking at the Treasury curve right now. Okay, 10-year yields, they're basically unchanged on the day. 2-year yields are actually up. And if I look at gold, it's actually very slightly down. So what do you make of the fact that even with, the stock market sentiment kind of falling apart here, it hasn't been met with big demand for risk, for havens, rather?
No, and actually, when you think about it, almost none at all. I mean, the dollar is pretty much unchanged. As you mentioned, the 10-year is unchanged. Gold is actually, as you said, negative on the day. Silver's up, but that's hardly the go-to haven trade. I think markets are thinking and hoping that this push into the Donbass region will be sort of a one and done for Putin, that this will not be expanded, although equity markets are obviously not taking it that way. And I think the equity markets are probably focusing more on higher energy prices. And with the higher energy prices, given the Nord Stream 2 situation as one of the factors into that, you're going to see higher inflation, and the higher inflation will be eating into disposable income. And so for the equity market, you have a situation where consumers do not have the money and they'll be spending less, and that impacts earnings and, of course, stock values. So I think the equity market's looking at it from that perspective, but FX, metals, and treasury markets are looking at it with, I guess, fingers crossed, hoping this is more similar to the Crimean situation.
Right. Like I do feel like there's some feeling of containment, if that makes sense, in terms of, I've been looking at the volatility curve, the VIX, in terms of we're seeing an inversion shorter term and longer term out. It calms down, and that's unusual. And people understand why we're seeing the trade, Vince, that we're seeing in the markets right now.
Yeah, no, and I think everybody, a lot of the risk guys, the fixed income guys, the smart money guys are probably sitting back and thinking, who in their right mind would start World War III?
Be careful what you ask.
Yeah, exactly. We said in their right mind. This clearly could escalate if we're still waiting, as you mentioned, on the president's remarks and to see what U.S. sanctions will be. But the expectation of the markets is they'll be muted and that they won't want to impose sanctions too heavily on Russia and instigate the situation further. So there is going to be a lot of this step back, wait and see thing, and also a big reaction or a big part of this that no one's really looking at is China.
I'm glad you took us there. Yeah.
Yeah, people like to think, this is great for China because that may embolden them to move on Taiwan. But the one thing China can't handle is international instability, which affects domestic instability, higher prices, slower global growth. The engine that keeps the Communist Party in power is their ability to keep that economy afloat, and they cannot afford global instability. So while they may initially support Russia in the first move, going into Donbass, it is highly unlikely that they will support any further aggression. And so the hope is, and I think this plays also into where the fixed income guys are and the FX folks, the hope is that China will balance Russia aggression, and this will not necessarily de-escalate quickly, but at least stop where it is.
Krita, you love watching geopolitical events.
I do.
And I do think about that when we look at what's going on with Russia, we have to also put it in the context, like Vince said, in terms of what's China's role in all of this?
Well, I'm really glad that you guys brought up China, because one of the things that people have kind of said, you have to watch this asset, is the yuan, actually. Because if you're looking at these kind of reserves that that Russia has in this effort to de-dollarize over essentially the last decade, a lot of those reserves are in the yuan, actually. So there is kind of that element of exposure, but you have to kind of be careful to watch for it as an indicator, simply because it is a currency that is fixed by the Chinese government, by the PBOC, obviously. So it's not always an indicator of like market sentiment necessarily the way it traditionally would. It's also really important to put these kind of geopolitical moves in context with what we saw during the trade war. That kind of volatility is what you're seeing coming back. Mike Regan had an amazing piece over the weekend saying that we thought the trade war was over, we thought that volatility was over, and here we are with that same kind of geopolitical volatility once again. And if you actually compare, you guys know I love to look at the oil market, compare some of those moves in the oil market, 3%, 4%, 5% moves. That's pretty normal to what we saw back when President Trump was tweeting and you had that very passive-aggressive trade war.
What I really want to talk about is what this all means for the Fed, because I mean, I've been watching that March contract, and at one point it was pricing in 45 basis points worth of hikes for March. Now we're back down to about 35 basis points. Vince, what do you make of this? I mean, how do you think that the Federal Reserve officials are watching this play out? Because on one hand, I mean, higher energy prices, that's inflationary. On the other hand, I mean, just given what we know about this Fed, I mean, would they be reluctant to hike into such uncertainty?
I don't think they're going to be reluctant to hike, because they have to not just balance that geopolitical risk, but they have the certainty of higher inflation. They have to watch for. This is basically the Fed's worst nightmare in looking at the potential of slower growth and higher inflation. This is beginning to sort of play out, if this continues along these lines, similar to what went on in the late 70s, early 80s, where you had rampantly higher energy costs, which definitely crimped consumer spending, and at the same time, with those higher energy costs, higher inflation. And the Fed was way behind the curve on that one. And the Volcker Fed had to do some serious catching up, which was very painful in those days, I promise you. As Charlie Pellet reminded me this afternoon about waiting on lines at gas stations, odd and even days to fill up your car. We're nowhere near that, fortunately. But there is a Fed that needs to be on guard for something along those lines happening. So I think they still hike. I don't think they go 50. I think they do start the process, but the pace is going to be a very, very, very difficult thing for them to manage, I think, going forward.
Yeah, it does make it tricky. And I think about Sean Donnan's story. We're going to hopefully talk to Sean a little bit later on, but he writes about, after long COVID, U.S. businesses getting ready for long inflation. Kriti, we've talked about, as we go through this earnings season, how important it is to see what CEOs are saying about running their businesses and how they're managing. And we've heard a lot about higher costs. Some are able to pass higher costs off to customers, some cannot.
Yeah, and I think when we talk about these supply chain issues, we should also, once again, I'm going to bring this back to geopolitics because it really is all connected. Some of these supply chain issues and some of the reasons a lot of these companies have been able to kind of pivot so quickly. Apple is the one that comes to mind. There have been several others that have been able to adapt more quickly to these supply chain issues. Well, it's because a lot of these tech companies in particular were also exposed to the trade war when these supply chain issues were first coming up before the pandemic. The idea that we want to lessen our dependence on Asia and those Asian supply chains. So they kind of maneuvered to make that. And it was those companies that have been able to get a better handle on those supply chain issues. Bringing this back to the current geopolitical context, though, we got to keep in mind that, yes, we're dealing with supply chain issues, but they're not necessarily connected to the Russia-Ukraine conflict just yet. And I think the best method or the best way to think about that is what you saw in 2014 with Crimea. Yes, there was this annexation. Yes, there were these sanctions. But at no point were food shipments, were wheat shipments, were oil shipments ever stopped or interrupted at any point. Of course, this is a very different
scenario. Because this will ultimately
scenario.
hurt Russia, right? At some point, it could.
That's the theory, right? But then you also have to keep in mind that there could be this bounce back. That's something that I believe the number 2 head over at the NSA had spoken to David Weston about. He said that we're preparing these sanctions, but we have to be prepared for the bounce back because there is that kind of interdependence, intertwining in those markets. But at the end of the day, the United States, Western Europe, they do have the upper hand when it comes to balancing all of these, especially when it comes to that currency exposure. The dollar is really what's coming in handy here.
Right.
And that's kind of what sets this situation apart from the historical.
We are talking with our Vince Signorella and our Kriti Gupta. Just a reminder, we've got stocks just bouncing off their lows of this session, but nonetheless, we've seen a risk-off trade, really, but not necessarily a run into a lot of those safe haven assets. S&P down 72 points, a decline of 1.6%. Dow down nearly 2%, a decline of about 648 points. Same story for the NASDAQ, down just about 2% at a loss of 266 points. And we are awaiting some comments from President Biden from the White House, an update on the U.S. position and possibly more sanctions against Russia when it comes to Russia's increased aggressive stance when it comes to Ukraine. We're talking with Vince Signorella and Kriti Gupta. Vince, I am curious on your blog and the kind of conversations that you guys are having on the macro squawk desk, what kinds of things are crossing, what traders are saying in terms of front and center. Do they, do feel like we get through this and then we move on and we're all once again focusing on just the Fed?
Yeah, I mean, the traders I'm talking to this morning, I think, were caught a little blindsided by the extent of the losses in equities. To almost a man, all of them were looking for opportunities to buy the dip, thinking that this was an opportunity for that the thinking what, again, the fixed income and FX guys are thinking that, this aggression is going to be halted at a certain point, that things aren't going to get significantly worse, and that the market was going to move past this, and these are better levels to buy than sell. That was about 350 to 400 Dow points higher when we started having those conversations. So I imagine most of these guys are pretty much run over by now, and I don't know if they have the legs to get back in again. As you mentioned, we are off the lows, but only about 70 points off the lows for the Dow. Is still another 600 and change to go.
And Vince, I want to go back to what you said about the Fed's worst nightmare. I'm still thinking about that. And I'm looking at, the 2s, 10s yield curve right now. I see it's below 40 basis points. And at least in my eyes, this seems like a pretty natural flattener because, you have the short end elevated with rate hike bets, but you also, potentially have that haven bid returning to the long end. I mean, that would obviously flatten the curve. How worried do you think the Fed is worried about a potential inversion here? And again, we're still 40 basis points away, but the trend is definitely lower.
Yeah, and you make a good point. But I mean, given though that we're still we're still in QE, and as we head into a tightening cycle, it does confound the inversion conversation. It's not, it's not what it used to be. And if you go back about 20 years or so, actually buying steepeners right now is probably a decent trade because while they still can go lower, we've only gone into inversion in the last 20 years twice, and it was really brief. 10 months later, a recession followed, but the curve steepened sharply after that. And
so it was kind of hit and run or a hit and go. I'm not sure which way you do it.
No, go ahead. Is Biden speaking?
No. I was going to say, though, in terms of the inversion and then recession and then bounce back, I mean, it was pretty quick.
It was really quick. I mean, it lasted for in the space of a fixed income trader's mind, maybe about a month or so, and that is relatively quick. And when you get the steepeners that come back off of that, you're basically seeing the far end of the curve catch up, and more likely than not, that is going to be the case. But that also 10 months later led to a recession. So for an equity trader, if you see it invert, don't panic right away, but start packing your bags because you probably have only 9 to 12 months before the equity market rolls over.
Okay, so we're waiting for President Biden. We're watching a live feed in the White House, expecting an update on the situation. It was expected to be earlier, then it got postponed. So we're waiting for him to get up and speak and just see what the latest is in terms of the U.S. position. Kriti, do you widen out and think about the rest of the week and what we've got on tap when you think about the markets?
Yeah, absolutely. I think we also forget that we have a lot of Fed speak this week. And to Katie's point earlier, it kind of feels like the geopolitical piece of it has taken over, essentially, when we're talking about the Fed. What's interesting to me is that despite a lot of these kind of thoughts about more a more aggressive policy when it comes to geopolitics. The idea that a invasion, a war, potentially would be more inflationary because of this. Well, wouldn't that make more central banks want to hike more in theory?
Right.
And yet, when you speak to economists at several of the banks, they say, well, actually, no, you want it to be a little bit more gradual. You want the move to be slower, but steady, and steady at the end of the day wins the race, whatever that phrase is. JP Morgan, for example, coming out with 9 rate hikes for the next year consecutive.
Aggressive.
It is, but what's interesting is we talked to Bruce Kassman this morning, and we asked, why is 50 basis points not on the table if you have this call that inflation needs to be targeted? And he said, well, because the Fed's just not going to be that aggressive because there's still that much amount of uncertainty and it can't shock the markets. But then you look at your screens and you're like, well, the markets kind of feel shocked, but that's the balance that they're dealing with.
We saw that in the latest FOMC minutes. They still put out COVID concerns and things that could certainly prevent the recovery from moving as quickly and the inflationary pressures to continue to exist.
And it could turn on a dime, to your point.
Exactly. All right, guys, thank you so much. Deep dive into the markets, and rightfully so. Vince Signorella, Global Macro Strategist at Bloomberg News. Find him at SQUA Go on your launch pad. And, of course, our thanks to Kriti Gupta. She'll be back a little bit later on. We're going to do some more on the energy market. She's markets correspondent at Bloomberg. Quick check on at least the equity markets for you, everyone. Still down about 1.5% on the S&P 500, bouncing off our lows. So too is the Dow, a decline of 1.8%. And same story for the NASDAQ, down just about 1.8%, but again, just bouncing off our lows. All right, let's do a quick check with Joe Matthew, host of Sound On and our Bloomberg Washington correspondent there in our Washington bureau. Joe, we just got the warning. We are expected to hear from President Biden in just about a minute and a half or so. What are you going to be watching out for?
Well, there's just so many questions leading to this address, beginning with the fact that the question, I should say, why was it moved up an hour? And then he showed up over an hour late. We could have kept things where they were. And it gives us a sense that there's been some real movement here behind the scenes. There's been a lot of headlines moving this morning. We've been hearing through the afternoon the conversation, Carol, evolve, the terminology that we're using in terms of invasion or not invasion. A lot of back and forth here, and likely many communications with our European allies. So here we are now approaching 2:30 p.m. Eastern time, almost 90 minutes late, where we want to hear about sanctions. That's the big question. In what way will we follow the EU and the UK, Carol, in delivering what they have said would be crippling sanctions if Russia pushed it this far in Ukraine?
Yeah, no, absolutely. And we are going to be looking for those specifics and particulars, because that certainly is what spooks investors. Keeping an eye on the White House. Joe Matthew, thank you so much. Joe Matthew, host of Sound On, and of course, Bloomberg Washington correspondent, in a situation, Katie, that continues to be very, very fluid. We are seeing, looks like an aide to the president putting some notes on the podium there at the White House. So we do expect President Biden to come out at any moment. What he says could certainly impact the trade for us.
Absolutely. I have all my intraday charts up because, this is what Wall Street has been waiting for. We heard that this was going to be happening earlier in the morning, and really all day has been about the lead up to what exactly is Biden going to unveil in terms of sanctions, in terms of the scope. Obviously, we've seen the UK and Germany already come out with their own, so we'll see what follows here.
Right, absolutely. An economic impact and certainly a market impact. President Biden, he is approaching the podium there at the White House. Let's head there.
Well, good afternoon. Yesterday, Vladimir Putin recognized 2 regions of Ukraine as independent states. And he bizarrely asserted that these regions are no longer part of Ukraine and their sovereign territory. To put it simply, Russia just announced that it is carving out a big chunk of Ukraine. Last night, Putin authorized Russian forces to deploy into these regions. Today, he asserted that these regions are actually extend deeper than the 2 areas he recognized, claiming large areas currently under the jurisdiction of the Ukrainian government. He's setting up a rationale to take more territory by force, in my view. And if we listened to his speech last night, and many of you did, I know, he's setting up a rationale to go much further. This is the beginning of a Russian invasion of Ukraine, as he indicated and asked permission to be able to do from his Duma. So let's begin to, I'm going to begin to impose sanctions in response far beyond the steps we and our allies and partners implemented in 2014. And if Russia goes further with this invasion, we stand prepared to go further as with sanctions. Who in the Lord's name does Putin think gives him the right to declare new so-called countries on territory that belong to his neighbors? This is a flagrant violation of international law, and it demands a firm response from the international community. Over the last few months, we've coordinated closely with our NATO allies and partners in Europe and around the world to prepare that response. We've said all along, and I've told Putin to his face more than a month ago, that we would act together. And the moment Russia moved against Ukraine, Russia has now undeniably moved against Ukraine by declaring these independent states. So today, I'm announcing the first tranche of sanctions to impose costs on Russia in response to their actions yesterday. These have been closely coordinated with our allies and partners, and will continue to escalate sanctions if Russia escalates. We're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russia's sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either. Starting tomorrow and continuing in the days ahead, we'll also impose sanctions on Russia's elites and their family members. They share in the corrupt gains of the Kremlin policies and should share in the pain as well. And because of Russia's actions, we've worked with Germany to ensure Nord Stream 2 will not, as I promised, will not move forward. As Russia contemplates its next move, we have our next move prepared as well. Russia will pay an even steeper price if it continues its aggression, including additional sanctions. The United States will continue to provide defensive assistance to Ukraine in the meantime, and will continue to reinforce and reassure our NATO allies. Today, in response to Russia's admission that it will not withdraw its forces from Belarus, I have authorized additional movements of U.S. forces and equipment already stationed in Europe to strengthen our Baltic allies, Estonia, Latvia, and Lithuania. Let me be clear. These are totally defensive moves on our part. We have no intention of fighting Russia. We want to send an unmistakable message, though, that the United States, together with our allies, will defend every inch of NATO territory and abide by the commitments we made to NATO. We still believe that Russia is poised to go much further in launching a massive military attack against Ukraine. Hope I'm wrong about that. Hope we're wrong about that. But Russia has only escalated its threat against the rest of Ukrainian territory, including major cities and including the capital city of Kyiv. There are still well over 150,000 Russian troops surrounding Ukraine. And as I said, Russian forces remain positioned in Belarus to attack Ukraine from the north, including warplanes and offensive missile systems. Russia has moved troops closer to Ukraine's border with Russia. Russia's naval vessels are maneuvering in the Black Sea to Ukraine's south, including amphibious assault ships, missile cruisers, and submarines. Russia's moved supplies of blood and medical equipment into position on their border. You don't need blood unless you plan on starting a war. Over the last few days, we've seen much of the playbook that Secretary Blinken laid out last week in the United Nations Security Council come to pass. A major increase in military provocations and false flag events along the line of contact in the Donbass. Dramatically staged, conveniently on-camera meeting of Putin's Security Council to grandstand for the Russian public. And now, political provocation of recognizing sovereign Ukrainian territory as so-called independent republics in clear violation, again, of international law. President Putin has sought authorization from the Russian parliament to use military force outside of Russian territory. And this set the stage for further pretexts of further provocations by Russia to try to justify further military action. None of us should be fooled. None of us will be fooled. There is no justification. Further Russian assault in Ukraine remains a severe threat in the days ahead. And if Russia proceeds, it is Russia and Russia alone that bears the responsibility. As we respond, My administration is using every tool at our disposal to protect American businesses and consumers from rising prices at the pump. As I said last week, defending freedom will have cost for us as well and here at home. We need to be honest about that. But as we do this, I'm going to take robust action to make sure the pain of our sanctions is targeted at the Russian economy, not ours. We're closely monitoring energy supplies for any disruption. We're executing a plan in coordination with major oil-producing consumers and producers toward a collective investment to secure stability in global energy supplies. This will blunt gas prices. I want to limit the pain the American people are feeling at the gas pump. This is critical to me. In the last few days, I've been in constant contact with European leaders, including with Ukrainian President Zelensky. Vice President Harris met in person with the leaders in Germany over the weekend at the Munich conference, including President Zelensky. At every step, we have shown the United States and our allies and partners are working in unison, which he hasn't been counting on, Mr. Putin. We're united in our support of Ukraine. We are united in our opposition to Russian aggression. And we're united in our resolve to defend our NATO alliance. And we're united in our understanding of the urgency and seriousness of the threat Russia is making to global peace and stability. Yesterday, the world heard clearly the full extent of Vladimir Putin's twisted rewrite of history, going back more than a century, as he waxed eloquently, noting that, well, I'm not going to go into it, but nothing in Putin's lengthy remarks indicate any interest in pursuing real dialogue on European security in the year 2022. He directly attacked Ukraine's right to exist.
Put progress in your portfolio. Invest in sustainability with 3 new funds from Fidelity.
He threatened war unless his extreme demands were met. And there's no question that Russia is the aggressor. So we're clear-eyed about the challenges we're facing. Nonetheless, there is still time to avert the worst-case scenario that will bring untold suffering to millions of people if they move as suggested. The United States and our allies and partners remain open to diplomacy if it is serious. When all is said and done, we're going to judge Russia by its actions, not its words. And whatever Russia does next, we're ready to respond with unity, clarity, and conviction. We'll probably have more to say about this as it moves on. I'm hoping diplomacy is still available. Thank you all very much.
All right, that, of course, was President Biden at the White House. A relatively brief statement, I would say about 8-9 minutes long, but some of the key headlines is saying that the President Biden saying this is the beginning of a Russian invasion of Ukraine. Russian actions require firm response from the United States and its allies. He's announcing the first tranche of sanctions on Russia specifically and says they will begin to impose further sanctions on Russia, implementing sanctions on Russian sovereign debt. And then, of course, working with Germany to halt Nord Stream 2. I mean, Katie, you and I were talking in the break, like, who would have thought in December of 2021 that this was going to be one of the main stories we're talking about? But we do have to think about the impact on the European economy, the impact on the U.S. economy, the global economy, and what the implications are.
Absolutely. I mean, it's probably convenient for U.S. investors, at least, and global investors, that everyone was already hedging for the Fed. I mean, if you look at SPY, HYG, some of those big ETFs, the put volume was already quite high, and it's only accelerated in the past week.
Absolutely. Just other headlines from the president says he's closely monitoring energy supplies and really emphasized that he is looking to not have an impact on the U.S. economy, but specifically the Russian economy. Our Joe Matthew has been listening along with us. He is there in our Washington bureau. He is host of Sound On Bloomberg Radio and our Washington correspondent for Bloomberg TV and radio. Joe, brief but to the point, the president.
That's right, and no questions. Interesting. Sometimes Joe Biden likes to take a few rounds with reporters who were in the room. We were told microphones were set up, but as soon as he was done with prepared remarks, Carol, he turned and left the East Room, having shown up, 90 minutes late almost for a speech that had been rescheduled today. It was a late add to the schedule here, and I will remind everyone that it comes 1 week to the day before this president delivers the State of the Union address to a joint session of Congress that this morning was not too pleased with the president mean, from Republicans, we heard the term appeasement being thrown around various statements, and even some Democrats, including Tim Kaine, the senator from Virginia, a good friend of Joe Biden, and his closest ally in the Senate, Chris Coons, the senator from Delaware, suggesting that it was no longer about waiting, that Russia had gone far enough to implement at least some sanctions now. And of course, we now know what those are, reserving the right, as the president just made clear, to ratchet up sanctions. He's obviously got something else up his sleeve. Carol, he said, as Vladimir Putin is making his next plan, we are making ours as well.
And Joe, Carol and I were talking a little bit as Biden was speaking that this seems fairly bipartisan, these sanctions on Russia. And I'm curious, I mean, has anyone from either side of the aisle indicated that they're opposed here?
Well, it's interesting. Actually, there was no agreement on sanctions, which is why we never got legislation. Republicans and Democrats did not see eye to eye on the timing, whether you hit them now or hold it for more leverage later, whether we should be going after Russian banks and some other issues that left the Senate, if you can imagine, with what appears to be something most people agree on, to your point, a non-binding resolution, which was a big disappointment for a lot of folks who expected a very strong bill. The chairman of the Senate Foreign Relations Committee, Bob Menendez of New Jersey, at one point said they were on the 1 yard line, and it was something he promised would be the mother, as he said, of all economic sanctions bills. There's no such thing today. It's coming from the Treasury without Congress really having its fingerprints on it.
So what does this mean for a Vladimir Putin who's just watching this unfold? Does it embolden him, or does it temper him back a little bit?
I'm not sure it does either. I think we're going to have to wait with everybody else. Even his inner circle, as they call it, doesn't seem to quite know exactly what Vladimir Putin's next move is going to be. We know that Russia has learned to live with sanctions. Sergei Lavrov, the foreign minister, said as much just over the weekend. And I think that Vladimir Putin's going to do his best to act like he's not concerned about this. Clearly, he saw some of it coming. We've been threatening crippling sanctions that would shut down the Russian economy for weeks upon weeks, and we're not even there yet with what the president just announced. So I'm not sure this is going to stop Vladimir Putin in his tracks.
And what would those crippling sanctions maybe look like? Because if we look at some of the sanctions announced today, you know, on Russian assets, on Russian sovereign debt, you know, I would imagine that obviously Russia isn't thrilled to see that, but maybe not the kind of crippling measures that have been threatened. What might those actually be?
It's hard to say exactly. You know, there was a lot of talk about having Russia expelled from the SWIFT financial communication system. That seems to have been pulled back a little bit here. The idea, though, that the U.S. would directly, personally sanction Vladimir Putin and go after those who we believe, the autocrats who are in charge of his money and some of the places where he likes to stash his cash, those are the sanctions that a lot of folks are looking for here, and exactly how this government in the U.S. can cut off Russia from the U.S. banking system, not allow them to use dollars, for instance. There are a couple of things that we could still have up our sleeves. But again, Republicans said that we should have put that into effect weeks ago, and this White House still has yet to do so.
All right. What's the wrangling going behind? You know, you talked about that the president was supposed to speak earlier, then it was delayed, and we saw the back and forth here. And I can only imagine the conversations that are going, on behind the scenes, and certainly with the U.S.'s allies, NATO allies specifically. What are you hearing on that front?
Well,
about
it's
the kind of
interesting.
debate
You never
that's
know.
going on.
Yeah, well, look, when you hear, first of all, the chancellor from Germany today coming right out with Nord Stream 2. Remember when we had him at the White House a couple of weeks ago, he wouldn't even say that out loud. That was a pretty major development. Also hearing the Prime Minister of Italy, Mario Draghi, say, well, we should probably look for some sanctions that are sustainable here, with concerns about what this could mean for energy prices in Europe. I am not privy to conversations that are happening behind closed doors at the White House. Very few people are, unless you're in the room. But I will remind everyone that this has been a day-to-day, in some cases hour-to-hour process, keeping arms locked here among our European allies. But also, when we go to bed at night, we have no idea what the president heard today. That goes on any day, by the way. And in fact, what's going on right now could be downright scary.
And Joe, to your point, this is such a quickly moving situation, like you said, hour to hour. With that in mind, I mean, what should we be watching for next?
I think it's going to be where the troops are. You know, we saw videos showing Russian tanks rolling, some personnel carriers, but we want our own evidence. And this is something, by the way, that the White House was apparently waiting for this morning based on what we heard from senior administration officials. They wanted to actually have the knowledge, not just hear that Vladimir Putin was going to move into some of these regions. I'll remind you that the two separatist regions that we're talking about, that were first hit with sanctions, where now obviously the Russian government is acknowledging as their own separate states, essentially. Those separatists lay claim to land that they don't necessarily control. There are a lot of areas that are not under their military control. And that could lead to some very dangerous moments if Russian troops, in fact, are moving further into the Donbass. That is the real immediate concern here, is to see if fighting breaks out in the Donbass and whether Vladimir Putin, as the president just said, in fact, goes further into the country, and this White House expects that he will.
When we talk about fluid situations, this is certainly one of them. Joe, thank you so much. We know you'll have more on Sound On a little bit later on at 5 p.m. Wall Street time right here on Bloomberg Radio. Joe Matthew, host of Sound On and Bloomberg Washington correspondent. All right, that's where we are, the latest when it comes to the Russian situation and Ukraine and U.S. reaction to it. Let's get an update on the trading day because we're certainly seeing it play out there. Let's get over to Charlie Pellet.
Thank you very much. And here's what's going on. Carol Master, indeed, stocks off. Session lows. They did move higher, still in the red, but moved higher as the president was speaking. Right now, right to the numbers, with the S&P down 56, a drop of 1.3%. Worst level of the day had been down by 82 points, down 1.9%. So to be clear, right now, we do have a loss of 1.3% in the S&P. We've got the NASDAQ Composite Index down 190, down 1.4%. The Dow is down 534. Down 1.6%, and the 10-year yield right now 1.94%. Spot gold down $3.20 the ounce now to $19.03, drop there of 0.2%, and West Texas Intermediate crude up 1.4%, $92.35 a barrel. Equities lower as investors weigh the potential damage from sanctions to Russia after President Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. Again, recap. 10-year yield 1.94%, S&P down 53, a drop of 1.2%. And now let's head to the Bloomberg 99.1 newsroom for a look at world and national news. Here's Nancy Lyons.
Thanks, Charlie. President Biden says Russia has committed a flagrant violation of international law by declaring the independence of two breakaway regions of eastern Ukraine and moving troops into the area. Because of that, President Biden says new sanctions are being put into place.
We're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either.
Biden says, in addition, sanctions are being placed on Russian elites and their families. He also noted Germany's put a hold on certification of the Nord Stream 2 pipeline. Biden wrapped up his speech this afternoon with another plea for negotiations with Russia. That's if President Vladimir Putin is serious. Jurors reached a guilty verdict on federal hate crimes for the three white men convicted of state murder charges for chasing down and killing Ahmaud Arbery, a young black man who was out jogging through their Georgia neighborhood. Arbery's mother, Wanda Cooper Jones, came out of the courtroom today with her hands raised in victory after the guilty verdicts were read.
I knew that we would get victory on the state level and in the federal level. I knew that from day one.
Wanda Cooper Jones says the Department of Justice was forced to try the killers of her son because the family and supporters applied pressure. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol and Katie.
All right. We appreciate that. Nancy Lyons with the World and National News Update. A lot going on. We did mention, and Charlie mentioned, stocks have bounced off their lows of the day, so keeping an eye on that as well. I want to get to our next guest. He's written about the U.S. reaction and watching what's going on in Russia and Ukraine specifically. He has written about why the U.S. cannot allow Russia to create a sphere of influence. He's also talking about really basically, managing to some extent the information that's going out there and how the U.S. is learning to win the information war. Hal Brands is Bloomberg Opinion columnist, Henry A. Kissinger Distinguished Professor at Johns Hopkins University School of Advanced International Studies. He's a scholar, too, at the American Enterprise Institute, author of The Twilight Struggle, What the Cold War Teaches Us About Great Power Rivalry. Today, he is on the phone in Baltimore, Maryland. Hal, it is great to have you here with Katie and myself. So initially, as you continue to see this situation unfold, President Biden just making some comments about some sanctions, what's your initial thoughts here?
So I think that the Biden administration has tried to strike a balance between being strong in its response to what we've seen from Russia so far, while also holding in reserve more severe sanctions that might be put in place if there's further Russian aggression in Ukraine. And so the first tranche has been fairly impressive. I think the central measure is basically putting Nord Stream 2 on hold, and we'll see what happens if Putin goes further.
And Hal, I want to wrap this into this column that you had out on Friday, that the U.S. can't let Russia get a sphere of influence. I mean, just listening to President Biden speak, some of the headlines coming out saying that, Biden still believes Russia is poised to go much further, that this is the beginning of a Russia invasion. I mean, if you could, look inside the president's mind right now, would you say that this is the fear, that that's what Russia wants to create, a sphere of influence?
I think that's certainly what the Biden administration fears, in part because Putin has mobilized a force that is far bigger than he needs to simply send some so-called peacekeepers into the Donbass. If you take Putin's rhetoric seriously, he's talked about rebuilding the influence the Soviet Union used to have. He's called the collapse of the Soviet Union the great geopolitical tragedy of the 20th century. And so I think at this point it's only prudent to expect that his objectives are not limited to eastern Ukraine.
Isn't it kind of ironic, though, the U.S. is okay about it being involved in spheres of influence and being the great influencer, and yet it's very uncomfortable with others?
There is a certain irony to that, of course, or as critics might call it, hypocrisy. But, of course, the big difference is that most countries want to be part of America's sphere of influence, with a dynamic that's obviously absent from the Russian case. And so there are very few countries that are trying to leave America's system of alliances today. There are many, many more that would prefer to be part of that system. It's the opposite when you look at the countries around Russia's periphery.
So just to follow then, so what's really at stake here? And if Russia is allowed to have too much of its way and sway, if you will, in the region, what are the implications, the longer-term implications?
Well, there would be a sustained crisis of security along NATO's eastern frontier as Russia gathers strength and postures its forces more menacingly in Ukraine and Belarus, in addition to on its own territory. And I think one of the concerns that American policymakers have always had is that when aggressive authoritarian regimes are able to carve out a sphere of influence, they don't necessarily stop there. They might simply use it as a platform to push further. And so I think the fear in the United States and in many European capitals would be that Putin would use a strengthened position in Eastern Europe to apply greater pressure to the Baltic states or Poland, for instance.
And Hal, I want to turn to another piece you had out for Bloomberg Opinion, that the U.S. is learning to win the information war. And you highlight that, the Biden administration, they've been willing to publicly release sensitive intelligence on Russia. I was telling Carol earlier that I was listening to Biden speak on Friday, and I was kind of shocked to hear him say that he expects invasion within the next few days, within the next week. To hear that from the president, it's not something we've gotten used to. And I'm curious what you think is behind that strategy shift.
Well, part of it is about forcing Putin to pay as high a price as possible for what he's doing in Ukraine, in part by depriving him of the ambiguity and surprise in which he likes to cloak his actions. And so the United States is trying to get out ahead of Russian moves as a way of rallying the broadest possible coalition to punish those moves when they occur. I think the other thing that's happening, though, is the United States has learned that it simply has to be faster when it comes to responding to disinformation, whether in this or other contexts. So we've seen that the Russians are certainly going to try to create a variety of lies and mistruths around their role in Ukraine, perhaps inventing Ukrainian provocations. And the only way the United States is going to be able to push back against that disinformation is by getting its own story out more quickly.
Right. And it also is kind of, I guess how you could say is, hey guys, we know what you're doing, even before it is publicly known. Like, we're on it.
That's right. I mean, there's certainly some messaging going on here that U.S. intelligence has very good information, not simply on Russian troop movements and military preparations, but on the innermost decision-making of the regime. And I would imagine that some of these releases are meant to create a certain sense of doubt or even dissension within the regime by advertising the fact that its innermost communications are presumably compromised.
What's the risk of doing this, though, on the part of President Biden, especially if he gets something wrong?
Well, you could look foolish if you get something wrong. You could promote crisis fatigue if you're constantly warning about an imminent invasion. You could also blow sources and methods. And so if the United States too aggressively publicizes information that it has obtained through sensitive sources, it could make it easier for the Kremlin to figure out what the conduit for that information is in the first place. And so there's certainly a balancing of risks that has to be involved here.
All right, we're going to leave it on that note. Listen, we really appreciate your insight and taking some time to chat with us. Hal Brands, Henry A. Kissinger Distinguished Professor at Johns Hopkins University School of Advanced International Studies. He is a Bloomberg Opinion columnist. And as we mentioned, he's got a book that's very timely right now. It is entitled The Twilight Struggle, What the Cold War Teaches Us About Great Power Rivalry Today, joining us on the phone from Baltimore, Maryland. All right, we do want to take you back to the markets and get an update on today's trade. Once again, Charlie Pellet.
Thank you very much, Carol. Off session lows, the Dow, the S&P, NASDAQ still, however, in the red. Recapping, President Biden saying the U.S. will impose a first tranche of sanctions on Russia and is shifting American forces already based in Europe. Biden's announcement follows earlier sanctions after the European Union and the U.K. set out an initial set of limited penalties targeting Moscow. The president spoke live on Bloomberg Radio. Equities lower across the board now. Investors are weighing the potential damage from sanctions to Russia after Russian President Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. The S&P is now lower by 36 points. The S&P is down now by just about 0.9%. At the worst level of the day, the S&P had been down 82 points, down 1.9%. The Dow down 437, down 1.3%. NASDAQ down 142, down by 1%. 10-year yield 1.94%. Spot gold is down 0.2%, $19.02 the ounce. A lot of movement in energy markets. West Texas Intermediate crude up 1.4%, $92.35 a barrel. Brent up 1.2%, $96.57 a barrel. Recapping, 10-year yield 1.94%. Gold, we've got the S&P down 42 points now, down by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. We're keeping an eye on the markets, as Charlie just noted, and of course, any new headlines involving Russia, Ukraine, and the U.S.'s position there. In the meantime, a little bit of a break. Watching shares of Tesla, they're down about 5% today, but again, the overall market is down. The Lone Star State, though, becoming more and more interesting to Elon Musk. A story in the current issue of Bloomberg Business Week taking a look specifically at Musk's Boring Company as it moves deeper and deeper into Texas. Let's get more on her story. Sarah McBride is venture capital reporter at Bloomberg News. She's on the phone in San Francisco. All right, Sarah, always never boring is Elon Musk. So what's up?
Well, he got a bunch of permits, or at least his company, the Boring Company, got a bunch of permits in the county next to Austin, Texas, called Bastrop County. And they've got a site there where they got approval to do test digging, to build worker housing and house other equipment related to testing different types of tunnel maneuvers in Texas. And they said that they plan to dig a bunch of 300 feet to 600 feet long tunnels to test all types of different maneuvers for tunneling.
And Sarah, what's interesting, I feel like Elon Musk and Tesla are two phrases that are more often in sentences together. I mean, I think about Tesla itself. The headquarters are in Austin, Texas. Talk to us about that gravitational pull with Musk and Texas.
Well, there's no getting around the fact that California, where Musk's companies had previously been based, has much more onerous requirements and permitting processes, taxes, and it just seems like it all got too much for Elon Musk. So he has been moving more and more business to Texas, and of course Texas is delighted to have him, and it makes a lot out of how much easier they say it is to do business in Texas compared to California. And in this case, in very little time, the Boring Company was able to come to Texas, get permits, and is able to start legally digging with very little in the way. And it had found one or two places in California where that was possible, but by and large, it's much easier to work in Texas for him.
What I love about stories like this is it's just a reminder that as we, often on a daily basis are talking about what the Fed's going to do, or we're watching what's going on in terms of geopolitical concerns, that companies like an Elon Musk are continuing to make decisions and figure out what's the smartest moves for their strategy. And this is Elon just finding, here's a place where I can be probably more productive and hit the bottom line more quickly.
Yeah, I actually think that was the thought process going through his heads and the heads of his executives running Boring, and they are in Texas now. They, if things go well for them, they've talked about different plans in Texas. For example, in San Antonio, it's possible they could want to dig a tunnel connecting the Tesla Gigafactory to other sites in Texas, and they have their project ongoing in Vegas now, which is also kind of a lower regulation state.
And Sarah, we don't have much time left, but okay, Boring, big in Texas. Where is it pulling back from?
So at the beginning of Boring's life in 2016, shortly after that, they'd had big plans in LA, for example, where they were going to go to Dodger Stadium, go under a big clogged highway called the 405 highway on the west side, Washington, D.C. to New York. They haven't talked about any of that in several years, and now they're focused on these shorter projects of a mile or so.
Yeah, so it's interesting to see the shift. But man, when he wants to shift, he just does it. Sarah McBride, thank you so much. Venture capital reporter at Bloomberg News. Her story on Elon and the Boring Company, you can find it in the current issue of Bloomberg Business magazine. All right, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 22nd, here is Bloomberg's Renita Young.
On this day in Black history in 1989, DJ Jazzy Jeff and the Fresh Prince win the first rap Grammy for the crossover hit.
Parents just don't understand.
But the duo, also known as Jeff Towns and Will Smith, were not there to pick up their award. When it was decided that the Soul Rap Award would be announced during the non-televised portion of the Grammys, the hip-hop world boycotted. Smith at the time called the idea of an afternoon award,
but it's a slap in the face.
While there were critics, supporters of the boycotts thought the stance helped the duo cement what would become decades of success in music, television, and film. That's today in Black history. I'm Renita Young, Bloomberg Radio.
All right, that is Renita Young with the latest installment of Black History Month. All right, we've got just a few minutes. We're going to head over to our TV team, talk about the markets. This as stocks are definitely bouncing off their lows. Carol Masser and Katie Greifeld, and you are listening to Bloomberg Radio.
high level by far is the best on the market today. It just is.
I absolutely love
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left in the trading session on this Tuesday afternoon. Caroline Hyde, Romaine Bostic, Taylor Riggs, joined right now by our colleagues Carol Masser and Katie Greifeld in for Tim Stenovic. We bring together our audiences across Bloomberg TV, radio, and YouTube. A day, Carol, where everyone right now is focused on those geopolitical issues that at one point on the day had really taken the wind out of stocks.
Yeah, absolutely. And we're bouncing off our lows. But what's interesting, I'm thinking about Russia. I'm thinking about what China's doing in all of this. And in the meantime, I've been watching some of those Chinese ADRs under a lot of pressure. Again, increased regulatory oversight. We got that from the news overnight out of China. And just a reminder that we have to kind of keep an eye on a lot of different things in this environment, Katie.
And I mean, Chinese ADR is still under pressure. But what caught my eye that after the press conference by President Biden, you actually saw the Russian ruble catch a little bit of a bid. It's now over 1% stronger against the dollar. Haven't seen that in a while.
See what she did there, Romaine?
What's that?
She said stronger, not higher.
Oh, there
well
you
done.
go.
You're invited back,
That's
Katie.
why
I used to report on currencies. I can't
there
say
you
higher.
go. You've already in the good graces of Taylor Riggs here. We talk about the equity markets here. We were down almost a couple percentage points pretty much across the board. We are well off the lows of the day right now. The S&P only down about 0.6%. The Dow still down by a percentage point. The NASDAQ composite down by 0.6, and the Russell 2000 down by about 3 to 4 tenths. We should point out just real quickly on the S&P 500, at one point in the day, we had hit that 10% threshold for correction. We are slightly above that now, about 9.8% below that all-time high. Remember, we haven't closed at a 10% correction level since at least a couple years.
Certainly keeping our eyes there on the drawdowns as we usually do. Let's dive down a little bit into the sector level. We go down one level, for example, as we do for our radio audience every day, the winners and the losers. And this is highlighting, Romaine, the defensiveness in this market. It's utilities and real estate. Those are the bond proxies, except wait for it, yields are higher on the day because we actually might be more concerned about inflation than we are sort of risk havens or safe havens catching a bid. But down at the bottom, Romaine, it is notable. Energy, of course, and some of these consumer discretionary stocks on that classic risk-off day. Those are the biggest losers.
Yeah, and I'm going to take a look at some of the individual movers, and unfortunately, all of them are in the red here, despite the rebound off the lows for the broader market. A lot of the big tech stocks are still in the red. A lot of concerns here right now about valuations, not only because of geopolitics, but of course about inflation and the Fed. Tesla shares down 3% here on the day. Travel stocks remain on the back foot, including United Airlines down 1%, once again off the lows of the day, but some concerns about any company here that has significant cross-border exposure here. Macy's shares down about 3.5% on the day. We're going to hear from the CEO a little bit later this hour on the heels of their earnings report. And keep an eye on Expeditors International, a freight and logistics company. We don't talk a lot about them much, but they talked about the fact that they had a cybersecurity hack here over the weekend. This is a company that touches a lot of different industries and a lot of different companies. So some concerns here about whether that could cause some ripple effects in the supply chain. Those shares down 2%.
It's really interesting, the trade. You've got to take it all into account. We've seen so much pressure on the equities, but if you look at the dollar, you look at gold, you look at treasuries, we haven't seen the run into safe haven specifically. And I feel like if you look at the VIX futures curve, which is what you're looking at right now, for those on radio, it's basically a straight line, but typically this curve slopes to the slopes downward, excuse me. And what we've seen is an inversion, which is just a reminder that right now we're seeing concerns, the VIX really spike right now, but we understand why. It's those geopolitical concerns. You look further out and things start to calm down. So it's just a reminder that if we see the situation ease, then we can see that we can go back to kind of just focusing on those normal things, whether it's corporate earnings or what the Fed does next, guys.
Carol, if. And I think that's what's so interesting with my conversation here with the CEO of Micron. I'm in beautiful Boise in their R&D HQ right now, and the conversation is actually everyone thought the supply chain headaches would ease in 2022, but now the CEO of Micron is saying, look, maybe it's going to take a little bit longer than anticipated because, once again, you've got more headwinds, whether it be inflationary pressures, whether it's one-off issues at certain manufacturing units, where we've still got Omicron, and notably now, Russia, Ukraine, it's not just about oil oil, gas. It's about metals. It's also about neon, about palladium, about gases. To make a chip, to make a wafer, it takes 600 different chemicals and gases to do that. And we spoke about how important perhaps Russia, or how they're looking through these sorts of geopolitical tensions. Just have a listen to what Sanjay Malhotra said earlier.
We have multiple sources of supply. We have multiple sources from US, Europe, and Asia as well. And we have long-term contracts with those other suppliers as well. So while we continue to monitor the situation carefully and certainly hope that the situation will de-escalate, we believe based on our analysis, current analysis, that our supply chain with respect to noble gases is in reasonable shape. And of course, we will continue to work with our suppliers to make sure that our supply goes uninterrupted.
If Russia and Ukraine teach us anything, if COVID teaches us anything, is you need a more resilient supply chain.
Yeah, and I think this brings up the whole issue about our global supply chain, or whatever is left of it, basically kind of the breakdown. Really, if you want to be frank about it, really started several years ago here with the sort of the deterioration in relationships with the Chinese. Then, of course, the COVID crisis hit, and now who knows what's going to happen with the Russia-Ukraine situation. But it's just a reminder that so many of the things that we depend on, whether it is the raw inputs or even the finished goods, of course, they are sourced somewhere other than right here in America.
And if any of this changes the way the Fed thinks about it, we know long term, of course, some of these geopolitical events don't have a major impact on the economy. You're still looking at a 2-year yield that's up 9-10 basis points on the day to a 156. Is it maybe a rethinking of how we're thinking about some of these inflationary effects that even the president said he's trying to limit from hurting the U.S. consumer?
All right. Well, our discussion will continue in less than an hour's time for Beyond the Bell, when we have our cross-platform coverage continuing on TV, radio, and YouTube. We'll see you again. We'll take you through the market close on this Tuesday, 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Katie Greifeld in our Interactive Brokers studio. And man, we've seen quite a bounce back in the equity trade here.
Yeah, it is pretty remarkable. I mean, you're looking at the S&P 500 down just 0.4%. Carol, I don't know. There's an hour left in trading. Will it get there? Remains to be seen, but the direction of travel definitely strongly higher since we heard from President Biden.
I mean, I always think about the tone, right? Especially as we get closer to the closing bell, right? If we see selling into the close, if we see buying. And what is it that President Biden said specifically? Was this a sign of de-escalation, right? That we didn't see more stringent sanctions or moves against Russia specifically? So it makes you wonder, okay, what are the conversations going on behind the scenes to kind of figure out a much more peaceful resolution here?
Yeah, perhaps it could be a case of, buy the rumor, sell the news. The fact that, I don't know, perhaps the sanctions weren't the absolute severe that they could be. I mean, just looking across risk assets right now, you have Treasury yields also moving higher, just that haven bid that we were talking.
Right?
It is interesting. And I mean, it gets back to what we were saying in the simulcast that, if the supply chains are so delicate right now, the Fed has to get control of inflation. That's the longer term look to take. And I mean, this Russia-Ukraine situation, if nothing else, it's going to just make those fragile supply chains even more strained. That means more inflation. That means more Fed tightening.
Right. We keep, the idea of transitory, which we know the Fed threw out that word, but nonetheless, there is still, I think, an expectation or conversation among FOMC members that this isn't going to persist forever, but it doesn't matter. In the meantime, the longer that it goes on, that it has an impact on so many different sectors, certainly on individuals and certainly on the growth that we see.
Yeah, and I mean, you're seeing that again reflected in markets. If I look at overnight swaps, I mentioned earlier that, that 50 basis point hike, bets on that had been eroded, pulled back a little bit. You are starting to see some more pricing come into that March contract. So we're hovering around 37 basis points. That's really a 50-50 toss for 25 or a 50 basis point hike in March. So I don't know. I just keep thinking about what Vince told us, Vincent Signorello, that this is a really, really tricky spot for the Fed.
It is. And we know that it's very clear when the economy is falling off a cliff what the Fed needs to do. When it's gangbusters and you clearly understand it's not in a situation where you've had trillions of dollars of stimulus put into the global economy, you're not coming out of a pandemic. Like, it's clear what the Fed needs to do. This is tricky. There's so many questions. All right, we're going to continue this conversation, continue to watch the market, certainly on this Tuesday. In the meantime, let's also get back to world and national news. Lots going on. Nancy Lyons on it all from D.C. Hey, Nance.
Thanks, Carol. President Biden says the U.S. will impose the first wave of sanctions after Russian President Vladimir Putin recognized the independence of two self-proclaimed republics.
Who in the Lord's name does Putin think gives him the right to declare new so-called countries on territory that belong to his neighbors? This is a flagrant violation of international law and demands a firm response from the international community.
That response, according to Biden, includes targeting Russia's sale of sovereign debt abroad and on the country's elites and their family members. He says Russia will pay an even steeper price if it continues its aggression. The three white men already convicted of killing black jogger Ahmaud Arbery while he was running through a Georgia neighborhood have now been found guilty in their federal hate crimes trial. Travis McMichael, his father Gregory McMichael, and their neighbor William Roddy Bryan now face additional sentences and heavy fines. Ahmaud's father, Marcus Arbery, reacted following today's verdict.
I give all glory to God, and we got justice for Ahmaud.
During the trial, prosecutors shared text messages and social media posts in which the men used racist slurs and made other derogatory comments about blacks. The Supreme Court has agreed to hear the case of a Colorado web designer who says her religious beliefs prevent her from offering wedding website designs to gay couples. Lori Smith contends Colorado is violating her First Amendment protections with a law that bars businesses from discriminating on the basis of sexual orientation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Katie Greifeld in our Interactive Brokers studio. So watching a few things certainly on this Tuesday, including while everything is going on in the world, and we're watching what's going on over between Russia and the Ukraine and the world's response to it. Meantime, feels like business as usual when it comes to Wall Street.
Absolutely. I mean, I feel like this comes out every single quarter that banks, they're increasing their bonuses paid to bankers. The latest headline comes from HSBC News Crossing that they're boosting the bonus pool by $3.5 billion, boosting bonuses by 31%. And I mean, it's a story we're all used to, that there is an incredible talent pool right now. It's incredibly competitive, and banks are having to pay up really across the pay spectrum.
Yeah, absolutely. And I guess when we hear these amounts, we're kind of blown away, but it's happening at Morgan, it's happening at JP Morgan Chase, Goldman Sachs. They receive bonus increases, at least for deal makers. M&A has been really hot. So those folks receive bonus increases of as much as 30%, 40%, and 50%. So we did see right when we went through the earnings, when you go through the balance sheet in terms of personnel expenses, it's been a lot.
Yeah, I mean, Goldman Sachs alone paying an average of 23% more per employee for last year. So just some incredible numbers there. And this HSBC story, it follows Bloomberg reporting from this month that some junior bankers at HSBC could receive bonuses worth up to 100% more than what they received last year. So that's junior bankers. And then more senior staff, they were expected to receive at least an average of at least a 10% increase in their bonuses. So again, it's across the spectrum. There's a lot of breadth here.
Yeah, there is. But it's certainly, in some cases, a big, big jump from a year ago. Hey, I have no easy segue, but I do want to mention something that popped up on the Bloomberg. Apple's flagship retail store in Amsterdam is in the midst of a hostage.
Whether it's a technology first, a fashion first, a science first, or a first for us all. Whatever you hope to achieve for your business, Cloud First helps you get to value first. Let there be change. Accenture.
Stocks are well off session lows. The Dow, the S&P, NASDAQ, to be clear, still in the red, but again, well off session lows. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure, but like you said, well off of session lows. Dow's down 328 points, was down 715. S&Ps are down 19, while the NASDAQ paring losses to 45. The U.S. 10-year yield at 1.95%. Gold is down 7. Oil is climbing. And Bitcoin is trading higher by 2.9%. Among the main 11 S&P sectors, only real estate, healthcare, and utilities are in the green. And leaders to the upside in the Dow, Amgen, and McDonald's, while Home Depot plunged as much as 10% after earnings and led to the downside. In other news, at his press conference, Biden says this is the beginning of a Russian invasion of the Ukraine. And in deal news, Cummins to buy Meritor for $36.50 a share in cash. Wrapping things up, Mosaic and Palo Alto Networks report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Carol Master, Katie Greifeld. We are live in our Interactive Brokers studio here on Bloomberg Business Week. So one of the stories that definitely is a must-read today, it's also among our most read on the Bloomberg today. It has a line. It starts with U.S. businesses getting ready for long inflation. So let's get to it. Sean Donnan is Bloomberg News senior writer for economics on the phone in Maryland. Inflation. Sean, your story is so relevant, especially when it comes to our discussions about what's going on in the economy and what we might get from the Fed next. What are you guys hearing and what were you reporting on?
Yeah, look, I mean, we've all been hearing about higher inflation for some time now. And I guess when you start calling around to U.S. businesses and asking them what they're expecting, their answer is you should expect to hear about it for a little bit longer, maybe longer than a lot of people expect right now. And that's, this is the big question confronting the Federal Reserve at its meeting in March. It's going to get to work, and we're expecting it to raise interest rates. They've really telegraphed that. That's the beginning of a fight against inflation. But that's going to take some time, economists say. And businesses are still looking at this year and thinking they're going to have to deal with elevated inflation for some time.
And Sean, where do wage increases, the cost of labor, factor into this? Because that's where inflation can get really sticky, right?
Exactly. And look, so already we've seen, a lot of people calling last year the return of the power of labor. We saw those strikes at places like John Deere that yielded some big wage increases for workers there. But that's not over. If anything, that's building speed. And that's a big worry for the Fed, who worry about a kind of wage price spiral. In other words, that as higher prices cause workers to ask for higher wages, that leads to higher prices as companies try to pass on the cost of those higher wages and so on. I was talking to a guy called Brian Nelson, who works for an agricultural equipment parts maker called HCC. They're based in Illinois. They are a big supplier to John Deere. And you know what? It's going to hurt him this year, he says, is he's going into wage negotiations with the UAW, who just negotiated a new contract with John Deere, and he's expecting a lot of the same there. You talk to other folks, a lot of small manufacturers, and they're expecting to have to raise wages again pretty aggressively just to keep up with the competition and to get out ahead of inflation.
Sean, I can't help but feel, especially coming off the financial crisis, we were in such a period of low inflation for so long that we were all kind of shocked by it, right? And then I wonder, would we still be in that period of low inflation had we not gone through the pandemic, or were we starting to see signs that something was changing in our inflationary environment that was just different fundamentally?
Well, look, I mean, the big irony is that before the pandemic, the Fed was really hoping to get a little bit more inflation in the economy, right? We had this. There was a hope that you get to run the economy. They wanted to run the economy a little bit hotter, and President Trump certainly made that point over and over again. He wasn't necessarily after higher prices, but he wanted faster growth, and we've seen that this time around with the response to the pandemic, the economic crisis side of the pandemic, that everyone has done their work to get the faster growth, and it's gotten this higher inflation that's there. And the big question now is how long that sticks around. One of the really interesting things right now, there's a really interesting note out from JP Morgan's chief economist last week, making a point that all of the models that we have now for inflation don't really explain what's going on now with inflation. And that raises a big question, and that is, are we entering a new era of higher inflation, or are we going to go back to what we saw pre-pandemic? And a lot of economists are betting that we're going to have higher inflation for longer, and that's going to have consequences for businesses and consumers and the economy as a whole for some time.
And if we are heading into that environment, I mean, you highlight in the piece that for some companies, actually persistently high inflation, it's not so bad.
Right. I mean, if you're Walmart and competitors are charging higher prices, there's an argument and it's an argument that executives there make, that that's actually good for business. It draws more customers their way. We also talked to the CEO of the price comparison site, Trivago. He says, look, if people are spooked by higher prices out there, they're going to spend more time on price comparison sites looking for bargains. So there's always a little bit of an upside, but it becomes a grind for a lot of families, and that's something that we're going to have to get used to. Thinking just a little bit more about the purchases. I think a lot of people felt flush through the pandemic. They weren't spending as much on commuting. They were getting the government stimulus checks and so on, and they were spending that on goods or home renovations and so on. We may be entering a period where we have to think a little bit more about what we buy.
Yeah, gosh, that's no joke. Hey, I do also love in your story where you talk about this HCC President Brian Nelson and how because of higher inflation, he had to put off his retirement because the board wanted this 70-year-old to stay on, somebody who understood an inflationary environment. Just got 20 seconds. I mean, we're seeing this, right? We want executives who understand this cycle. Just quickly, very quickly.
Absolutely. And Brian makes the point, look, I went through this in the 1980s, and I'm not freaking out this time because I've been through it before. He also does business in Brazil. And you know what he's doing? He's getting his people in Brazil to train these people in the U.S. on how to deal with inflation, and how to ask customers for higher prices.
All right, good stuff. Sean Donnan, senior economics writer at Bloomberg News, on the phone in Maryland. You're listening to Bloomberg Business Week. Carol Master, Katie Greifeld, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Katie Greifeld, and we're watching oil. It seems like the markets have steadied to somewhat, the energy markets, but
it seems like, I mean, you look at the price of crude oil. It got to $96 a barrel. That was very exciting. Now we're all the way back down to $92. So yeah, it definitely feels like we've settled down a little bit.
About a 6.5% or 5.5% swing.
Sounds about
there?
right.
Yeah. Okay. We'll get the details from those folks who are following me. We'll get to that in just a moment. In the meantime, back to your top business stories and a look at that trading day. And Charlie, just about 28 minutes to go.
Indeed, off-session lows still red on the screen, right to the numbers. Fast-moving markets, got to keep it locked into Bloomberg Radio, not only to see how things shake out at the close, but of course how Asian markets will react tonight. We've got complete coverage for you here on Bloomberg Radio. Stocks pared back some losses as President Biden joined allies in announcing a new tranche of sanctions on Russia after his counterpart Vladimir Putin recognized two separatist republics in eastern Ukraine and ordered troops sent to them. The S&P is now down 31, a drop of 0.7%. S&P have been down 82, down as much as 1.9%. The Dow now lower by 375, down 1.1%. NASDAQ is down 100 points, a drop for the NASDAQ Composite Index of 0.7%. 10-year now down 132nd, 10-year yield 1.93%. Spot gold down 0.3, 1,900 even the ounce on gold. West Texas Intermediate crude down 1.4%, 92.35 a barrel. Brent up 1.3% now, 96.67 on Brent. And again, West Texas Intermediate crude advancing today by 1.4%. We'll have more on the oil story coming up shortly. Energy prices surged with European natural gas leading the gains, up as much as a 13% rise, helped higher by Germany halting the approval process of the controversial Nord Stream 2 pipeline. Amrita Sen is Director of Research at Energy Aspects in London.
Putin has come out even just a few hours ago and said that gas supplies will be uninterrupted. And I think that has been one of the big fears in the market, whether because of either Western sanctions or because Russia decides to turn off both oil and gas supplies to Europe. But they have never done that before, including during the Cold War.
And today we are looking at oil stocks moving lower in the U.S. ExxonMobil, for example, down 1.3%, BP down 2.1%, Chevron down 0.9%, EOG Resources down 1.4%, Pioneer Natural down by 4%. Recapping, stocks lower, S&P down 27, down 0.6. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, well, oil, we did see it ease off earlier spikes, negotiations with Iran appearing nearer to a conclusion. There's a lot of things going on. We're also, of course, watching what's going on between Russia and the West in terms of supplies. So let's get to it. Bloomberg Markets correspondent Kriti Gupta back with us here in our Interactive Brokers studio, along with Julia Fenzeros. She's oil markets reporter at Bloomberg News. So, Kriti, I know this is a space you keep a watch on. We talked about it, I think, a little bit earlier. What is it that's been interesting in terms of the trade here?
Well, I mean, you guys know I love commodities. I also love geopolitics. Every time I come on this segment, I'm always have an oil chart.
You always kind of steer us, like, let's do this.
Well, you know, you're not alone. The poor guys on Boston radio say the same thing. They're like, oh, I guess we'll talk about it. But to me, what's interesting is I love commodities because it's kind of, for me, a little bit of a portal to kind of the rest of the world. Fun fact, the United States doesn't make a lot of things on their own. They don't have a ton of exports or service-oriented economy. So when you look at commodities, it's a really great gauge on the countries around the world that are perhaps sparking a little bit of trouble. So naturally, our eye right now goes to Russia, to Ukraine. You can look at oil prices. You can also look at wheat, aluminum, nickel, palladium, if you want to get really nerdy. Don't ask me what you use it for, but there are a lot of commodities right now. And I think right now, on a risk-off day, we are seeing a lot of pain in the equity market, a lot of pain in the bond market. The kind of sole spots of green here across asset is going to be in commodities, which is interesting because not only is that kind of your geopolitical premium, but you also have your classic inflation hedge. Or oil, right?
All right, palladium, it's used in rings. We all know that. But apparently the largest use of palladium today is catalytic converters.
You know,
Cars.
I was just on the tip of my tongue, but
Was it? No, it wasn't. Julia, come on in on the conversation. You're watching these numbers in the movement. We've seen a fair amount of volatility.
Yeah, for sure. I mean, earlier this morning, as Katie said, oil hit $96 a barrel. And that is crazy because we've been watching these highs. And that's all based on the fact that maybe there was going to be sanctions on Russia. And what would that mean? That means that maybe it would be tougher for Russia to export oil because they're exporting oil, or for any of their country, for any countries to really get in business with Russia. And so that was the huge problem. But Biden spoke at 2 p.m. and he appeared to be avoiding the harshest sanctions on Russia. So that also helped cool down oil prices along with the Iranian nuclear deal.
I'm very happy to hear you say that because Carol and I were batting around that theory that, okay, maybe these sanctions weren't as bad as feared. That's why you're seeing a little bit of a relief rally, at least in equities. But Julia, I am curious, you kind of, in your latest piece, you kind of lay out there's two forces here. I mean, we've been laser focused on Russia and Ukraine and what that means for the price of oil. Like Creedy said, it's been green for a while now. But tell us about the Iran nuclear deal, because as you say, it looks that maybe negotiations have reached the end game.
Absolutely. So people and traders especially have been keeping an eye on this because any extra supply to the market is going to be absolutely welcomed because OPEC is not adding as many barrels as they are saying. They're not adding the 400,000 barrels a day. U.S. producers, they're not really being as tempted to ramp up. Yes, we're seeing some production, but any supply, that's going to be welcomed into the oil markets. And also you have this, buy the rumor, sell the news. Now that, Russia has been escalating, more traders are saying, okay, well, that was baked in last week. We're going to sell a little bit. So those things are really helping temper prices.
And I mean, something you hear all the time that higher prices cure higher prices. What are you hearing from analysts? Is it broadly the same when it comes to the energy markets, to oil prices?
Absolutely. They've been
that basic supply demand, right? It's too expensive, right?
Exactly. But they're saying that it could get up to $120 a barrel. Wow. That $100 is not the stop anymore because of inflation, because there's still room to grow. So 120, keep an eye on that.
Yeah, I mean, it's just fascinating. We know how important. I do think about when we have these kind of geopolitical tensions that we all of a sudden pull out our charts of okay, so how much does oil, is contributed by Russia and who are the major players? And, the Middle East, I feel like, has been on the side, but I mean, obviously an important player here, Creedy, when it comes to how they could impact pricing here.
Yeah, I mean, and we don't also know the other players that are involved, right? We don't know whether the Biden administration is planning on doing another SPR release. This is something that has come up in several negotiations. We had Jaron Bernstein on Bloomberg Television a couple weeks ago who said that's totally on the table, even though it is kind of seen as a short-term supply dynamic. That still does affect prices.
Plays well politically, though, I think, ahead of midterms.
Right, especially when you're worried about gas prices, right? Another piece of the equation is shale producers. Is this finally the temptation, the level that they're finally going to kind of show up? But I think to Julia's point, I mean, you're seeing this in the options market. Big shout out to Javier Blas for tweeting this chart out. The options market is pricing at 150 and even higher. So that's going to be almost serves as a little bit of a magnet sometimes.
That would certainly get our attention. All right, Creedy Gupta, thank you so much. Julia Fenzeris, they're watching the energy markets for us. Right now, watching World and National News, Nancy Lyons. Nance, take it away.
Thanks, Carol. President Biden says Russia has begun its invasion of Ukraine, so he has begun to sanction Russia's access to world financial markets. Bloomberg's Irv Chapman with more.
The president announced what he called the first tranche of economic sanctions, which will ratchet up as the invading forces make their moves.
We're implementing full blocking sanctions on two large Russian financial institutions. We're implementing comprehensive sanctions on Russian sovereign debt. We've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade new debt on our markets or European markets either.
The president said more sanctions will target members of Vladimir Putin's oligarchic inner circle. He said he hopes he's wrong about his dire prediction and there's still time to avert the worst-case scenario. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. Attorney General says he feels for Ahmaud Arbery's family following the end of the federal hate crimes trial connected to his killing. All three white men were given guilty verdicts today for chasing down the black jogger nearly 2 years ago. Prosecutors used racist text messages exchanged by the men to make their case. Merrick Garland spoke after today's verdict.
I cannot imagine the pain that a mother feels to have her son run down and then gunned down while taking a jog on a public street. My heart goes out to her and to the family. That's really all I can say about this.
Attorney General Merrick Garland. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. So big bounce back when it comes to the equity market. Still down across the board, but man, looking a lot less risk-off-ish than we did, right? Just about an hour or so ago.
Yeah, and we'll see. I don't know. We have 19 minutes. The line can move a lot, Carol.
You're so right. Like, we'll see what happens as we get closer to that closing bell. Hey, in the meantime, a couple of car stories. First of all, gotta say, Charlie Pellet, I feel like he has this great crystal ball because he was talking about some people he knows, one individual in particular who's a dealer, I think sells Porsches, and was like, something happened with a bunch of cars lost at sea.
Oh my gosh, I love this
The Charlie
story.
Pellet indicator.
This reminds me so much of what we saw with, what was it, the Ever Given last year? Just another giant cargo ship. That one got stuck in a canal. That was a joy. This cargo ship, it carries about 4,000 Volkswagen vehicles. It caught fire last week. Turns out it could cost Volkswagen at least $155 million. That is according to one risk modeling company's estimate. Just in a staggering amount of money, Carol.
Yeah, the ship is called Felicity Ace. It went up in flames off the coast of Portugal's Azores. Am I saying that right?
I think so.
Yeah, Azores Islands. The Russell Group saying yesterday it estimates that there are $401 million worth of cars on it. VW Group had Volkswagen, Porsche, Audi, Bentley, and Lamborghini models on the vessel. VW spokesperson declining to comment on the situation yesterday, but apparently they lost, I guess, a bunch of cars.
It's amazing. And I mean, these cars weren't headed to the junkyard, like you said. I mean, we're talking about Porsches, Lamborghinis.
They were headed to your driveway.
I would hope so, yeah. These supply chain issues, they just get worse and worse. But in any case, so Russell Group, it's modeling for the total value of the vehicles on board. So its cost projections assume all the vehicles are lost. And the company also estimates that auto manufacturers other than VW may have lost about $246 million worth of vehicles.
It is nutty. In the meantime, this is a story I might talk about when we join our...
I'll tell you a little secret. The secret is be a high-level affiliate.
Profitability behind this particular affiliate model is absolutely insane.
At first, it was just a
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a number of headlines involving the Ukraine-Russia situation. First of all, Ukraine's President Zelensky signing an order to call up reservists. Also, the United States is deploying 8 F-35 jets along NATO's eastern flank, also moving an infantry battalion task force to the Baltics, and the U.S. is sending 32 anti-tank helicopters to the Baltics and Poland. Again, those headlines crossing the Bloomberg moments ago. Stocks do remain lower with the Dow, the S&P, and NASDAQ on the minus side. Key takeaway, we're off session lows. At one point, we had the Dow Jones Industrial Average slumping as many as 714 points, down 2.1%. Right now, we have got the Dow down 464, lower by 1.4%. The S&P currently down 42, a drop of 1%. NASDAQ lower now by 148 points, down by 1.1%. And the 10-year yield, 1.93%. Spot gold lower by 0.3%, $1,900 even the ounce. Big move for crude oil today. West Texas Intermediate now up 1.4%, $92.35 a barrel. Brent, $96.63. Brent crude up today by 1.3%. Equities have pared back some losses as President Biden joins allies in announcing a new tranche of sanctions on Russia after his counterpart Vladimir Putin recognized 2 separatist republics in eastern Ukraine and ordered troops sent to them. Recapping, stocks lower, S&P down 42, a drop of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The House of Representatives recently passed the America Competes Act, a nearly 3,000-page compendium of trade and industrial policy initiatives aimed at restoring U.S. economic strength and countering China's commercial power. The Senate passed a similarly ambitious measure called the U.S. Innovation and Competition Act last year. The U.S. Chamber of Commerce, which you'd expect to endorse efforts to strengthen American companies, indeed supported the Senate bill. But its letter criticizing the House bill makes for cautionary reading. The Chamber argued that so many market-suppressing initiatives are bundled into the Competes Act, it would actually wind up hurting American businesses rather than helping them. Congress is now attempting to reconcile the two sprawling bills. But it would be better to scrap them both and start over, this time with clearer and more limited goals. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just coming up on 10 minutes away from that closing bell on this Tuesday. It's a shortened holiday trading week, but nonetheless, it's been kind of a wacky Tuesday, to say the least, and of course, driven by geopolitical concerns. Our next guest notes that the S&P is down 10%. Maybe I think we thought earlier was about 11% from highs.
We were definitely through it. Seems like we've bounced back a little bit.
Yeah, definitely. But the average stock, he noted, is down 20% or more. So let's get to it with Walter Todd, President and Chief Investment Officer at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. Walter, so nice to have you here with Katie Greifeld and myself. So, all right, let's just talk about the day, first of all. A lot of volatility, it seems. We know where it's coming from. I don't know. How do you factor in a day like today into your longer-term thinking about the financial markets?
Yeah, well, good afternoon. Thanks for having me on. Yeah, you know it's going to be an interesting day when you pull up the old GIP on the Bloomberg terminal and you got 100 S&P points on the right-hand scale. So, yeah, it has been very volatile. It's a very fluid situation. I think it's important at times like these for us is just to kind of try to step back and look at, try to maybe dig in on some individual names and earning stories that we're still getting despite all these headlines kind of whipping things around. And I think it can present opportunities for companies maybe that have just reported that maybe don't have that much exposure to this situation directly that are getting caught up in this macro trade.
Yeah, and I mean, it's interesting to hear you say, you want to dig in on specific companies. I mean, Home Depot comes to mind because, man, their gross margins really didn't look too great compared to a year ago. I mean, zooming out and looking at that at a macro level, I mean, what does that tell you in terms of how companies are dealing with inflation, what the read-through into markets is?
Yeah, I think that's the quarters being reported, of course, for looking back are great, right? And to your point, though, looking forward, it's the guidance and the issues around the supply chain and what that means for margins in terms of the input costs, et cetera. I don't know. I'm not surprised that Home Depot's down on the guidance. I'm a little bit surprised at the magnitude of the move. I don't know why it was a surprise that growth was going to slow after 30% EPS years, but no, I understand the dynamic there, and I do think it speaks to a bigger issue. It's a combination of the input costs, but also the demand side is good, but it's moderating. I mean, let's face it, consumers are having to deal with a lot of other input costs themselves, whether it's gasoline, food, et cetera, that are going to kind of crimp their ability to spend on what they've been spending on for the past 2 years or so.
So how do we make sense, though, of the economic data? Is that fundamentally something that you think is important? U.S. consumer confidence dropping to a 5-month low on inflation concerns. So we see that playing out. Meantime, some decent, strong PMI data on the manufacturing and services sector. So, when we kind of get rid of all of the chaos and the static out there, I mean, fundamentally, what kind of backdrop is there for the U.S. economy?
Yeah, it's very, I would say, confusing at this point. I mean, aside from the geopolitical headlines, like you said, when you look at these various inputs, like you said, the PMIs, the market numbers this morning were pretty good, actually pretty strong. But then you look at consumer confidence. Conference board was okay, but the Michigan number, last week was, in recession territory.
Right.
And, some of these Federal Reserve surveys are weak as well. So it's very mixed. And again, I think it's important to go back to see what companies are telling you. And I would say that the message from management teams is not as dire as some of the macro headlines or data points that we're getting. It still seems pretty healthy. I would point to Walmart's quarter last week, which was pretty upbeat on their outlook, which is a little bit surprising, quite honestly. So I think management
which speaks
teams
to the broader, right, a wider swath of the U.S. economy. Is that fair to say?
I would say so. Definitely, lower income kind of dynamic there, but still, again, the pretty upbeat message from the CEO about what they're seeing from the consumer. But again, it's just a lot of different cross currents here, flying from a macro standpoint that are moving individual stocks in the markets around pretty aggressively.
And those cross currents from a macro perspective, let's just walk through them. I mean, we have the earnings season. I mean, again, it was pretty strong, but you did start to see maybe some not so great news coming out from companies such as Home Depot. You have geopolitical tensions. You also have the Fed to worry about. And I would love to hear your perspective on how you think Fed officials are looking across the balance of risks right now. And I do want to point out the yield curve looks very, very flat right now, through 40 basis points on that very key 2s-10s curve.
Yeah, absolutely, Kay. It's a great point. And, it's funny, we're basically the same place on the S&P that we were in the first week of October of last year from a level standpoint. But you look at kind of the changes on the Fed outlook. Back then, there was 1 hike estimated for 2022. Today, 6. The 2-year was at 28 basis points. Today, it's at 153. So very different backdrop from the Fed's perspective. And I don't envy their position right now because the growth is clearly slowing. It's a question of how much is more permanent versus Omicron related, et cetera. But then at the same time, you got this inflationary event going on geopolitically, spiking energy prices, et cetera. So I don't envy their position, but I think they're going to probably go slow at first and then speed up if they have to, based on the balance of what we've heard from all the individuals, which is quite a bit of commentary, unfortunately, from the Fed presidents themselves,
right,
which creates even more confusion.
Walter, just quickly, just got about 30 seconds. You shared with us some notes about the S&P down 10-11% from its highs, average stock down 20% or more. Does that mean there's some buying opportunities in your view? And just quickly.
Yeah, I do. I think it's across sectors, and there's a lot of focus on technology that's been hit the hardest. But I think you can dive into individual sectors across the board and look at opportunities in healthcare, in industrials, in financials, and even energy pulling back here off of the oil move. So I think I think there are some significant opportunities, particularly on the cap scale. Smaller cap stocks
If you had
have
some
been
new,
hit harder than large.
Somebody gives you some new money, just 20 seconds, where would you put it to work right now?
Yeah, so just some individual names that we hold that we find very attractive that have already reported: Dropbox, Cisco, Qualcomm, Intel, J&J, Biogen. Those are
all right. That's a pretty impressive
names
list.
that we own for our clients.
Okay, good to know. Love specificity. Walter Todd, thank you. He is President and Chief Investment Officer at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. This, as we're kind of bouncing around in the last hour or two, definitely off our lows of the session, but not as bouncing back as we were a little while ago. All right, you are listening to Bloomberg Radio. Get ready for our cross-platform coverage.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are right now 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bells on this Tuesday afternoon. Here to help take us beyond the bell, it's our global simulcast partners, Carol Masser and Katie Greifeld, in for Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, $42.99 right now on the S&P 500. If that holds over the next couple of minutes, we'll be down 10% from that all-time high.
All right, so significant in terms of that move to the downside. I'm also been thinking about some of the day's economic news. Those inputs continue to be conflicting. Some strong PMI data, but some weak consumer confidence data, Katie, that kind of just keeps investors on their toes.
And I mean, you add that on to, all of the geopolitical tensions that we're dealing with, and you're looking at an S&P 500, every single sector is red right now, not even energy stocks, which have been kind of the saving grace. They are actually one of the worst performing sectors on the day.
Yeah, and I mean, look, when you talk about...
Interesting that energy, of course, has been Romaine. Interesting that energy has been a key outperformer of late, of course, within those supply chain headaches. And many now worrying about the geopolitics, what those gas prices do, what those oil prices do to some of the companies. The inflation's going to remain. That's what Macy's CEO told us. Supply chain issues going to remain, but he still sees a strong consumer.
Yeah, I mean, a strong consumer, and we've seen this before, Caroline. You talk about Macy's. I mean, we've seen some of the other retailers and some of the apparel makers, Ralph Lauren and a few others, really kind of surprised to the upside here in their most recent earnings reports. But there is kind of the question here of how long that lasts. Like, what's the price point where consumers decide, you know what, I don't need those pants, I don't need that car, I don't need that washing machine?
Well, and that is the big question as you think about how the consumer shifts to pivot to, well, maybe we're still buying some clothes, but are we not willing to buy double the price of avocado guacamole, Romaine? These are all sort of the big questions as you're looking at a market severely under pressure.
Yeah, severely under pressure here. We've been under pressure now really going back towards the end of December here, a market that really has been lacking conviction and to a certain extent